Dear viewers, we saw the Black Monday last April 7th. Prior to that, we saw successively markets drifting down quite heavily in the US and other world markets, to a lesser extent in the Indian market. However, on April 7th, we saw a massive downslide in Indian markets as well. Every investor is worried. What next is coming? Is there a reputation of 2007, 2008? Will there be another crash like the one what we saw during the pandemic? Rightfully, when people have invested money big time, they are worried. And this crash is coming just at the culmination of this massive bull run, what we saw in the last 3-4 years. To know exactly what created this market fall, what's the way forward, what is it the investors have to keep in mind, and how should investors position their portfolios, we have called an eminent guest speaker today, Mr. Ashish Somaya. He's going to take you through all the things you should keep in mind and well informed on this market crash. This is NRI Money Clinic for you, and I am Dr. Chandrakant Bhatt, your financial guide for a happy living.
NRI Money Clinic. No hype, just the right advice.
Dear viewers, to talk about the market crash, I have brought to this episode a very eminent personality, Mr. Ashish Somaya, the veteran of the Indian market. He is the executive director and CEO of White Oak AMC. You have heard him many times, an eloquent speaker, a person who can simplify the complex issues to the level of the common man on the ground. Welcome to this episode, Mr. Ashish Somaya.
Yes, sir. Thank you. Thank you for inviting me. It's a pleasure to be back here.
I really feel very happy a person like you is available to the audience whenever we request for your service. And this is the one which gives confidence in the White Oak Capital AMC that you are available for people when you need them. We saw sharp sell-offs, and today, April 8th, at the time of recording this video, markets made a reverse turn. Looks like, even though it's not reversal of the previous one, but a massive reverse move, what we saw. This up and down movement, zigzag movement, is creating a lot of doubts in the minds of the investors. Let's dedicate next 20-30 minutes to understand what exactly is happening world over and what's its relevance to the Indian investors and how they should be futuristic in what they do today. My first question to you is, why this sell-off? What is the reason behind this?
So, I think, in a couple of our previous conversations at some point in time, we have spoken that, since Mr. Trump has, come into power, not only this time, even his stint from 2016 to 2020, there has been this Make America Great Again kind of, movement, which is basically, it is based on this feeling that, America is being kind of taken for granted by, the world at large. So even if now, if you hear Mr. Trump's pronouncements, it's basically tantamount to the fact that, he believes, or all this MAGA, M-A-G-A, Make America Great Again people, they believe that the American consumer for far too long has been the reason for the growth of, first Japan and then Germany and China and certain Asian countries, and nowadays maybe even India and Vietnam and Bangladesh and these kind of countries. And they also feel, plus, apart from American consumer, it's pretty much the same people, but they also feel that the American taxpayer has been footing the bill for managing this, global trade order, right? I mean, they have naval bases in multiple parts of the world, and, it is because of their benevolence or big brother behavior that, the ships are moving on the high seas and the trade progresses unhindered, even so much as protecting Europe from Russian aggression post the World War, right? So I think that the US is trying to make this case that we've been big brother for far too long, but now, it's almost looking like parts of the world are taking us for granted. So for instance, because the US has been running an open market for so many decades, if we try to sell something to US, then there are probably no tariffs or very low tariffs. But if the US tries to sell something to any of us, like say in India, then the tariffs are very high. And you and me know this. I mean, frankly, at some level, what they're saying is not wrong. I distinctly remember when I was a kid, if somebody had an imported car, importing a car into India had 200% customs duty. Even now, it is 100% customs duty. Because we have a IT industry, few years back we exempted stuff like laptops and all. But I remember there was a point in time for something like even a daily use item like a laptop or a computer which was not made in India, the customs duties were 40, 50, 60% to get into India. So what is happening is that the US basically believes that they have run an economy and they have run a market which is in essence a free market which does not have too many barriers. Whereas they feel that the world has not been reciprocating, the world has been not as open as how the US has been. So at some level, it has reached a situation where the US is buying from everyone. The US is running very large deficits. The US is running, a very large debt. Because obviously, if you keep importing, then you have a deficit. And that deficit is financed because the foreigners who sell to you, they receive dollars from you. And with that dollars, they are owning your debt. So they have a huge deficit combined with a huge debt which they owe to the world. And their case is that it is not because our consumers are reckless. It is only because we have been running an open economy. You guys are keeping your currency artificially cheap. If countries like China and India, it is alleged that we keep our currencies cheap, then on a relative basis, the US dollar will look strong. That will further encourage the US consumer because it's easy for them to buy. But for the Indian or a Chinese consumer, there is financial repression because if our currency is weak, then we will not find it easy to consume. And Americans will not find it easy to sell to us because the dollar is so expensive. So, all of this is just kind of, different aspects of what the case is being made that, the world is not open for trade, whereas US has been open for far too long. And now they feel that they need to rectify this situation. And in their wisdom, they think that the right way to rectify this situation is to impose tariffs. That, if we believe that you are charging us a 30% tariff, then now we are also going to charge you 30% tariff. And I've given you long explanation, sir, but this sell-off is obviously because just imagine why there is a sell-off. Because there is a feeling that not only US economy, the global economy will go through a slowdown. And the reason for this is understandable because if something was, let's say you're sending something from China to America or something from Vietnam, Bangladesh to America, let's say the cost was $100. After what Mr. Trump has announced, the cost would be say $130, $140 or $150 depending on what you're talking about. If 100 becomes 110, then you can imagine that the buyer will pay a little bit more, the seller might give some discount and buyer and seller can thrash it out. But if 100 becomes 150, you can't expect the buyer to pay 25 more and you can't expect the seller to discount 25. Then it will not end with the buyer and seller. Then countries will need to get involved and arrive at some quid pro quo. And that is what the US wants. The US wants everybody to come on the table and arrive at a discussion that you scratch my back, I scratch your back. You want to sell to me, then you better allow me to sell to you or you pay me. So I think that there is a fear that you can imagine that the ships on the seas will come to a halt. Some people will cut out on the production and say, what is the point in producing? We don't know whether we'll be able to sell or not. Say for example, you arrive at a certain price negotiation, you dispatch the goods, and tomorrow the guy increases custom duty by another 20%. Or after you dispatch, he says, okay, now this duty is no longer there, we waived it off. Then what are you going to do? Right? So there is so much uncertainty and you cannot have two countries arriving at a trade negotiation under a gun in 3 days. Right? Now India has been negotiating a bilateral trade agreement for many weeks and months now. And we are saying that we might arrive at a conclusion by September. But others who have not even started, America is saying reciprocal tariff, they are saying retaliatory tariff. So they are not even on the table. So I think there is a fear that some part of world trade would come to a grinding halt. It would hurt the world economy. And that is why stock markets have gone into a tailspin. So either many countries have to come on the negotiating table and arrive at some conciliation, or something has to change for people to get more clarity. But right now it's like lack of clarity. So one day the market is up, the other day the market is down. All these kind of things would happen for the next few weeks.
It takes me back many decades before. Like India suffered inflation, the US was also reeling under the inflation. The multilateral trade agreements helped US to bring down the inflation with the cheaper imports. It helped the US consumers and the US governments to tide over the sticky inflation at that point of time. It helps the Far East, which includes China and all these countries here, to grow. It was a beneficial arrangement, the multilateralism. But every cause has an effect with this. So you try multilateralism and you only keep importing and you keep printing money and give them IOUs. And one or the other day that will come back. That has come back now. Now where you say that no, everybody, you are growing at my cost. But you have
Yeah.
consumed. It's time for you to pay. You don't have the money to pay. And you say, I'll impose tariff, which means to say, to get back your own money, you pay me money, and with that money, I'm going to give you back. So the multilateralism is getting into a bilateral trade relationship. So the world order or the globalization looks to be something which is behind us. It started all with the Brexit, looks like. Now the Americans are arm twisting everyone into do that. How do you feel the economic landscape beyond this point is likely to unfold for the world in years ahead?
So if you really see, I think you summed it up right that, it's less of multilateralism and more of bilateralism, or, limited multilateralism in closed groups, something like that. So, but, not all of this has to be bad necessarily. Let's understand one thing that, Mr. Trump just might end up making people do what they have been avoiding doing. So let's take an example, say in China. Now, if you see, China obviously is an autocracy. Beyond the point, it's clearly not a democracy. Beyond the point, it's a single party, and now not only single party, it's veered towards single leader also. Correct. So clearly, they don't want a situation where their population gets exposed to too many things. Whether it is foreign media, whether it is foreign influence, all of those things. So, let's say, for example, a couple of years back, they really came down heavily on gaming and ed tech. So, they want to have a controlled society and a controlled social environment. Their economy has been obviously, they're 30% of the world's manufacturing, exports, Now, look at it this way, that, and America is alleging that they are keeping their currency suppressed. Now, any country where exports is the dominant theme, where they're manufacturing for the world, you can imagine that if they keep their currency weak, or if they keep their currency, China has gone from strength to strength, and the yuan has been, 7, 8 yuan to a dollar, right? I mean, they are controlling it. They don't allow their currency to appreciate. Whereas with so much progress, their currency should have appreciated a lot, correct? Now, what happens is that when you do not allow your currency to appreciate, you are basically trying to maintain your competitiveness in exports and in the industry. But there is a collateral fallout of that, which is that if you keep your currency suppressed, then your consumption, the ability or the power of your population to consume will always be suppressed. So you are gaining all this prowess in exports and manufacturing by giving up your population's ability to consume. That is called financial repression. You are ensuring that your people are not able to consume to the extent that they should be able to when you're already second largest economy in the world with $15,000 per capita income, etc. It could have been a lot more, correct? So China has not been allowing, or they have been creating circumstance where their growth is powered by exports and manufacturing and not so much by consumption. On the other hand, India has not been that great at industrializing and manufacturing, and we are for far too long running purely on domestic inward looking and domestic consumption. For a country of our size and a population of our size, our global trade or our participation in global trade or global exports is abysmal, right? So I think what will happen is that Mr. Trump's actions might, whatever he's doing, he might end up forcing China to grow consumption, which, by the way, Mr. Xi Jinping already made some statements that we have to fire up domestic consumption if we want our economic growth to sustain. So he's making China think of doing things which they have not done so far. And he's also making India to think of doing things. It is our track record that unless we are not put under pressure, we don't change, right? So, in India also now there are meetings happening that, how do we take this as an opportunity so that, we can get more manufacturing into India. We made some progress, but I think when we are under pressure, the third thing Mr. Trump is now forcing, Europe, like say country like Germany, they were of the highest order of fiscal rectitude and fiscal discipline that, we will forsake growth, but we will not let our deficit go up. But now Germany is saying, to hell with the deficit, we have to grow. right? So they are saying that, we will do some $200 billion of defense spending. We will not give any order to American companies. We will ensure that European sourcing and European manufacturing, so Mr. Trump's actions are not all necessarily to be questioned, because they are forcing Germany to grow. They are forcing China to rebalance from industrial into consumption, and they are forcing India to think about manufacturing. So everything is not that bad. And we should see how things will change. I think sometime they might end up changing for the better.
I think the world is reverting to the mean. So what should have happened did not happen, and now one action leading to the other. Probably it is moving to rebalance the whole equation. From a tilted position, is trying to find some kind of an equilibrium. Well, all
Yes.
said, how does these tariffs, this market crash, the fallout of all these things will affect India? Will it affect Indian GDP? If yes, to what extent? Is there any studies your firm has done on this?
Yeah, so see, the point is that India is, heavily consumer and services, and exports is not, exports clearly is, in the teens. It's not a big part of India's entire economy itself. And within that, if you really see, exporting to US is again, not really the biggest part of our, so 20% of our GDP is exports, and within that, exporting to US is not the biggest part of our economy, really speaking. So, like it's obviously there in the numbers that India exports some $90 billion worth of, goods to US, and US trade deficit with India is some 40-45 billion dollars. So we are not their biggest problem. Their biggest problem is China, because I think that trade deficit is nearly $1 trillion or something like that per year. So we are not their biggest problem. Their biggest problem is China. And any which way exporting to US, hence will have limited impact on us. But on us, the larger impact is the market, right? The financial impact, I mean, the financial market impact is much more than the real economic impact, so to speak. Because, like I made the case earlier, if globally the economic growth is going to suffer because of what is happening in this standoff, then clearly the stock markets globally would suffer. And because in the short term, all stock markets are one stock market, they get heavily correlated. Other markets are falling, so our market is falling. And also there is this pattern that people invest in baskets. So some 60-70% of the money which comes to India comes in the emerging market basket. So if people are worried about China's prospects and a Vietnam or a Taiwan's prospects, if people are worried about all these countries' prospects and they exit from an emerging market fund, then they will end up willy-nilly exiting from India also, although that was not the main reason. So I think we are caught up more in the financial market volatility. And as far as the economy or the long-term prospects are concerned, if you really ask me, let's break it short-term, medium-term, long-term. Short-term, I think it's only a market impact. But if you see medium-term, for example, say next year or two, it might be that, on a relative basis, if the tariffs on us are lower and if we are close to signing a bilateral trade agreement with the US, then we might actually end up benefiting on a relative basis. And if you see long-term, for instance, like I already said, we generally tend to reform. Everybody keeps talking about Amrit Kal. Now, this is our opportunity. If countries like Canada and EU and China are in a standoff with the US versus someone like India, which stands to benefit because we are not in the line of fire, then there is no better godsend opportunity than this for us to aim for all the reforms and to, and see, I think we should be encouraging some of these things. Like, say, now we have enabled BYD from China to say invest 75,000 crores in Andhra Pradesh. Now that's a great message to the US also, because obviously you are releasing that news when you are deep in the negotiation with US and trying to get Tesla also. So one is you can keep negotiating with Tesla, but it's a smart thing to release a press release that BYD is investing in Andhra Pradesh. So as far as China market is concerned, Tesla is under severe fire from BYD. In India also, if BYD is going to go ahead, then it's a very strong message for Tesla and US. So I think we, because of this competition, because of this standoff, we might end up actually benefiting. And we should encourage all these companies to come into India because, like I gave the example a lot of times, in 1984, when Maruti came, India had no auto industry. We had some old, Fiat Ambassador, etc., going on for 30 years. But when Maruti came, it was fully imported. And then from importing, it went to assembly. And right through the 80s and 90s, if you read the newspapers, you will see series of articles saying that now Maruti is, 60% indigenized, 80% indigenized, etc. So much so that in 30-35 years, we have become an export base. And some of the biggest auto ancillary companies in the world are Indian companies. All these Minda Industries and Sona Koyo and Motherson Sumi and whatever we hear. These are all because of, one was because of Japanese collaboration of Hero and Honda, and the other is Maruti and Suzuki. So when you get these foreign companies, they end up developing an ecosystem. If you see now Apple phones, or even mobile phones, we started assembling them. Only if you assemble, you will get into manufacturing components and then the base materials, right? I mean, if you're not even assembling here, then where is the question of the industry being set up? So it always starts with assembly and then moves backwards. So I think we have, textiles, footwear, electronics, automobiles, and so many other industries. We have great opportunity in times to come if we conduct ourselves in a particular manner.
It takes me back to my memories of 91, 92. I was a young boy of 30 years at that time, and the country was literally broke. And we pledged gold. We brought the money into India, and India was going through a reforms phase. I still remember the companies complaining that you are opening up and it will completely take out the Indian industry. And they were making a representation to government to protect the business. But the crisis brings the best out of them. The Indian companies became the global companies. They become very efficient. And it's easy to ask for protection, but when the crisis comes, the best of the best will survive. Probably a decade down the line, 2 decades down the line, probably we might remember this incident as probably the best thing that has happened for India. We should only hope for it. Well, now when Trump put these tariffs, the individual countries replied to him or reacted to him in different ways. China acted with a sense of panic or, retaliatory thing. You do this, I'll do this. Whereas India took a different path, looks like. How do you, see the response of India? Is it a mature response? Is it a prudent response? This present government makes most out of the situations. They made the best out of the Russia-Ukraine war. From the initial reports, what is being published in the newspaper, it looks like something is really brewing. Probably it's better for the country. And Trump
Yeah.
was on record to say that Mr. Modi is a far better negotiator than himself. How do you read the news pertaining to this, India's reaction to tariffs?
So I think, sir, see, definitely in the last few years, see, being friend to everybody or not being enemy to anybody, I think that has, definitely it works well. In a world where, we need all the possible avenues to grow, like say now we have suddenly opened up to Chinese investment into India, right? See, so those things are actually positive for us. Opening up to Chinese investments in India, having bilateral trade agreements, I believe, with Australia, UAE, deep in the closure with UK and then USA and with European Union. I think all of these are very, very positive developments and we need it. See, we have a demography, right? That demography can become a disadvantage or a disaster if people are not gainfully employed. We will have the biggest consumer force and the biggest labor force. But how do we leverage it unless and until we don't get enough investment? So, I think I would not go by the political statements, but just if you piece the different pieces of the jigsaw puzzle, I think it is all of it. At least we have an opportunity that all of it can come together. And that's why I said that, we keep talking about Amrit Kal and about accelerated growth in next 20-25 years. Now, this is a perfect setup for us to do the right things. All the people who are supposed to make some mistakes which might work to our advantage, they are making those mistakes. We are positioned well. So, we have to hope that it goes as per what it looks like.
You have been in the stock market for such a long period of time. Have you in your memory have any memories of similar tectonic shifts that has happened anytime in the past? And how did the world deal with that? Do you remember of any such similar incidences, if not tariff, something which has the great, impact on the way the economies will work?
So, recently, so I was much younger, but actually the biggest thing which has happened in the world is, two things till now. One clearly was obviously post Second World War, whatever, obviously we haven't seen it firsthand, but we read about it and we can see that it has benefited the world. So this whole post World War setup, where there were multilateral organizations, like for example, how did China come into being? They were a closed economy. They got admitted into WTO in the late 90s into 2000, 2001. And, so all these multilateral institutions which were formed after Second World War, I think that's an old story, but that is, I think, shaped the world. But in our living memory, Let's say, for example, something which from my college days till now, which I would have seen and read about, is not enough appreciated, is that if you see early 1990s to mid 1990s, see what happened was that first USSR collapsed, and it became, CIS, all those countries. So obviously the collapse of USSR and the end of the Cold War. And obviously in the late 80s, early 90s, the breaking of the, East Germany, West Germany, right? The wall was broken. So basically, what that has done actually, these three things which I told you, China, Europe, because of East Germany, West Germany, and USSR. Because of those three things, the world got more open, more integrated. And I read somewhere that just in Eastern Europe, after the wall was broken, just in Eastern Europe, some 20 crore people got added to the labor force of the world, which would have otherwise been behind the Iron Curtain. See, they were not part of the labor pool of the world. They were behind the Iron Curtain. But after USSR collapsed, because that was broken, those people came into the labor force. And then if you see China, all those people also got integrated into the world economy. So what has happened is in 90s onwards, till recently, the world has seen an explosion of the open market and world has seen explosion of availability of labor. And I think those things, because of abundance of labor, inflation went down and the cost of goods went down, cost of manufacturing went down, and wherever the capital was invested, it gave great returns. So this is something which we have seen right in front of our eyes in, from mid 90s, late 90s to 2000s, when large swaths of population got integrated into the labor force and the economy of the world, and they brought down inflation and they gave an impetus to manufacturing. See, you can have capital and you can be willing to invest capital, but it needs labor and it needs a market. And I think the world has benefited immensely from the end of Cold War and all these subsequent changes. Now, after a long time, so I could point out only two instances to you, and now I think this is what is happening is as big or as serious, as like Second World War was a turning point, breaking of Iron Curtain was a turning point, and now we are seeing something equally big, impactful, which is likely to reshape how things happen. So we have to see how it plays out. But given the size of our economy, given where we are in our stage of development, I think we can only get benefited, and we have to watch for all this constructively.
The audience or our clients or our prospects viewing public is interested to know, finally, how does it impact the stock market? What can they expect? Are the markets will go through a downward spiral? Are market likely to stagnate here, move sideways for a longer period of time? Or will they go through a slow creeping up movement? What's your assessment of the situation at this point of time?
Yeah, see, I think that next few days you will see high volatility, and high volatility is not necessarily a bad thing. But in my experience, high volatility, up one day, down the second day, up in the opening, down by afternoon, and again up before closing. So whenever there is heightened volatility, meaning movement on both sides, it doesn't mean anything. It only means that the market as a whole is not able to make up its mind as to what is the real value or what is the real impact of whatever is happening. So when the market cannot wrap its arms around the situation, that is when it will trade both sides, and that is when the volatility will be very high. So I am expecting that next few days volatility will be high, right? Because every day you will hear some or the other announcement. First you heard Mr. Trump's announcement, then people slept over it for the weekend. Then, people woke up to China retaliating and European Union retaliating. Then now people are hearing Mr. Trump saying that if China doesn't back off, then I will accelerate even further. Then we are hearing about many, many countries coming onto the table to arrive at bilateral agreements with the US. So you will keep hearing statements on both sides. The other thing we should not forget that, retaliation can mean anything. So, for example, in October 2023, or in mid 2023, it was a daily affair for Chinese aircraft to circle over Taiwan, right? What if that is also a modus operandi for retaliation that threaten the world with dire consequences, correct? So I don't know that in the next few days, some of these things, you keep hearing news of this type, the other type, this type, the other type, and the market becoming more and more volatile. Because for everybody, there is some amount of instigation to do, things which are out of the ordinary. So from that perspective, in the near term, I think we will have volatility. If you ask me in the medium term, say over the next 6 months to 9 months, you will find more clarity coming. You will find that multiple countries are, striking some kind of agreement with the US, or you will find that the US might water down its stance. Like, for example, saying that, okay, their biggest problem is anyway with China, right? So what if they say that, okay, for China, this is the tariff, and for other countries, we have agreed one, two, three, four things. So I don't know what all are the possibilities. So next month or two, I won't be surprised if volatility continues. But then over the next 6 to 9 months, you will start seeing some amount of normalization. In between all of this, we should not forget that there is expectation that US economy might significantly slow down and have some kind of recessionary phase. So you will also have some kind of change in the direction of flows, money moving out of US, going into emerging markets. Which emerging markets? What is the status of different countries? So I think we will get clarity in the next 6 months or so. I think if you see, we made enough discussion about the fact that India ultimately stands to benefit out of this, and at the least draw comfort from the fact that we are not directly impacted in any big manner. So from that perspective, if you ask me, next 3 to 6 months volatility will present some opportunities. And anybody who invests in the next 3 to 6 months stands to gain immensely in the next, say, couple of years even. And for long term, I already mentioned that this can actually just be the impetus for us to change some part of our economic structure, which is, which we have been poor at, but now there is a push for us to rethink about it or do the right things. So I think only the next few weeks, if I may say so, maybe next 2 3 weeks, we have next 2 3 months, or say next 6 7 weeks, we have to watch for the volatility. After that, you will see the direction coming. And I think India stands to gain. And last thing, we should draw comfort from the fact that, from September onwards, our market cap is down nearly 20%. So we are not as expensive as what we would have been a year back. And, domestic conditions are improving. RBI has been hinting at, a very dovish move. So they want to reduce interest rates. They want to pump in liquidity and help the growth. The government is back in full force in spending. They are pushing up consumption, not only tax cuts, but also something like eighth pay commission. And whatever is happening in US, weaker dollar, lowering yields, all of that just strengthens RBI's case for pushing liquidity and pushing growth. So domestic conditions are improving, and commodity oil prices are down, US dollar is down, yields are down. All of that is a great setup for RBI to relax our policy also. So not everything is negative. I think things will start improving in a matter of few weeks.
Just a few more sound bites from you. The last question for you. What's the final message for the investing community? Stop your SIPs, commit lump sum, invest regularly, time your markets. Who can be better to advise the investors than yourself?
You see, first question is a no-brainer because, if everybody was happily continuing their SIP when the Nifty was 26,000, then at 22,000, definitely it behooves everybody to not only continue, but also top up and double up and do whatever they need to do or they should be doing. So there's no question of not staying committed or not increasing your commitment to the SIPs. Lump sum, I would say not to jump in lock, stock and barrel because of the scenario that I described to you. I think we are not out of the woods yet. And, like I said, multiple people are having multiple instigations. So we should, we should believe that human beings can be mad. So we should watch out for the next few weeks. So lump sum, definitely, I would not tell anybody to jump in or be very aggressive. SIP should continue. And anybody who's looking to, because longer term, not even longer term. If you ask me my time horizon from, say, 1 year to 3 years from now, I think there's a high potential for very high return. So I wouldn't say lump sum, but people should do a systematic transfer over the next 3 4 months. Then they stand to any kind of further decline in market. If they catch the volatility, if they catch the downside, the good entry points, and then in a couple of years they can see significant returns.
I'm very sure the investing community will remember this incidents 2 years down the line, probably as one of the greatest opportunities. Like every crisis, whether it's pandemic, whether it is a scam or whatever it is, people could remember at the point of incidents as a matter of risk, 2 years down the line, probably they would remember as probably one of the finest opportunity to onboard themselves on the stock market. Thank you very much for your time, sir. You have been very kind to give us the time to record this video in such a short span of time. I, on behalf of my audience, will remain grateful to you forever. Thank you very much, sir.
Thank you. Thank you very much, sir. Thank you.
Dear viewers, hope the video that I have done today with Mr. Ashish Somaya helped you clear what's happening in the market and what's the way forward and how you should conduct yourself in your activity of investing. If it helped you to understand all these finer points, do give me a thumbs up. Do not forget to subscribe for our channel. Please do circulate this video with your friends and relatives and on all the social media. Thank you very much for watching this episode. On NRI Money Clinic, I shall be back with you with one another expert on one another topic very, very soon. Till then, stay safe. Jai Hind.
Press the bell icon for more details and subscribe our channel.